Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks, and I've got two more stocks for your aggressive growth radar screen. So let's get right to it. I've got a couple tech names, and today, the CPI number came in cool, and it looks like rates are going to be moving lower a little bit sooner than expected. So my first name that I've got here in my tech jamboree is Vimeo, VMEO. It's a little guy, $3.64, has a market cap of $585 million. It's a Zacks rank number one strong buy, and it's got the growth divergence that I love to see, an A for value, an A for growth, and a D for value. And we can see it could be time to be buying the dip here. And I think that's the idea of what I'm talking about in today's edition. So the stock came in September and October, posted a good quarter. Stock has rebounded nicely. Let's take a look at the numbers that we always love to see. Are they beating the number? An 80% beat, 100% beat, an even bigger beat, an even bigger beat. Love to see that. And then when we look at a loss, break even, a gain, a bigger gain, you've got, estimates or the reports coming in stronger than expected. Each time a little bit stronger based on the percentage beat. And then on an absolute basis as well, loss to break even, to a gain, to a bigger gain. So that's a dream case scenario on the report front here. So what are estimates doing? Well, estimates have moved from loss of 5, loss of 6 after just beating, now just a loss of a penny for the next quarter, current quarter that we're in for the company. We're sitting at a loss of 3 cents. I don't think the company really guided for next quarter just yet, and I think the analysts just holding their numbers steady there. This is the big move here. So going from a loss of 9 cents, we're now making money at 8 cents for this year. That has pushed this number for next year, going from a loss of 17 cents to a loss of 9 cents. Let's cheat a little bit and take a look at the growth. Now, I'm a little astonished here. We're seeing a contraction in revenue this year and just about flat next year. So wonder why that got on to be an A for growth. All right, 45 times earnings is a lot, but that's a swing from, we saw that swing from losing money to gaining money. So that's an important idea to keep in mind. 1.6 is price to book, 1.4 price to sales. Margins bottomed out down here, now turning positive. That's a plus 2% right there. And growth, again, a little bit challenged on the top line, but things are looking better for the market just in general and rebounding. So here we have the chart. Vimeo, boy, oh boy, we're going to be the next YouTube, or maybe not, and we're bottoming out here, and I think that's why we want to keep it on your eyes on this one, as we can see that there's some good distance between the estimate numbers, and we can see estimates have really moved forward in the right direction. So that one is Vimeo. It's VMEO. Put it on your aggressive growth radar screen. All right, next one. We've got the trade desk. It's a little bit bigger than we're normally used to seeing. TTD is what we're talking about as a ticker. It's a Zacks rank number 2. That's a buy. Again, my great growth divergence, an A for growth and F for value. Company beat here, but boy, oh boy, just 20% dip right after the earnings report. The question is it time to buy the dip in tech? Now, this one's obviously much bigger at $31 billion in market cap. This is one of those companies that does the programmatic ad buys. And we can see the earnings history here is pretty good. We've got beat, big time beat, little tiny beat, and a decent beat. 38, 23, 28, 33. So we're making money, right? But what's going on? 44 cents to 45 cents after the most recent beat, going to hold next quarter steady at 25 cents, much as the other name did. $1.25 for this year. No change there. That's weird. $1.54 for next year. So good earnings growth. There could be some upward mobility in the current quarter as well as for next. Let's go ahead and take a look at our growth story. It's much better than Vimeo. We're looking at 21% top line growth this year, basically achieving that feat again next year with another 20%. So with that big growth and stability comes a big forward PE, 50 times asset slim model. So you're going to have 14 times book and 17 times sales. Margins, look at this margin profile. We're going to shoot on up from 4.7%, 7.5, then 8.3. We posted just about 25% top line growth in the most recent quarter. So we take a look at the longer term chart. Since Vimeo doesn't have that longer term, we'll go through this. Pandemic, we're all going to die. No, we're not. We're gonna flood the market with money, and tech recession coming in as we normally see. And this year's been pretty good. This most recent quarter, though, just dipped big. Estimates came in a little up here as we see that, but I love to see this big line of growth there for top line for earnings. So this name is The Trade Desk, beaten down, bouncing quite significantly today as the whole market is up on that CPI and the idea of rates looking for a cut now, moving that up from July to June of next year. So is it time to buy the dip? And if so, these are two good names that have dipped recently and look solid. All right, that's it for this week. Be sure to join us next time when I look at two more stocks to put on your aggressive growth radar screen. Until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.